Morning all, how are we doing? Morning Stevie. How's everybody's day yesterday? Good? Quite a bit of movement yesterday. We had loads of ADR extensions yesterday, so lots of opportunities out there yesterday. I'm going to go through the trades that I took yesterday in a minute, because there was quite a lot yesterday. I didn't get a chance to really update much in the Telegram group yesterday. There's only one real trade, the US dollar CAD. US dollar CAD? Yeah. That I closed most of it out. So, and I did some drawdown control on oil, but we'll go through that in a minute. But yeah, so pretty good day. We've just had the monetary policy meeting minutes this morning on the Australian dollar. The Aussies had a little bit of a boost off of it, nothing dramatic, but we have had some positive movement, although it's retracing at the moment. We've got no other news today apart from CPI. I say no other news, it's important news. CPI for the Canadian dollar, normally positive. We've had one negative, or a couple of negatives in the last year, but mainly positive and neutral, which is tending to be positive for CAD. So we should get some positive CAD movement today, hopefully. Morning, Diamond. Which would be good because I've got my, no, actually won't be good because I've got US dollar CAD long at the moment. So yeah, might have a look at that, see where that gets to today. I've milked loads out of that, so I might close that out. I'll have a look and see where we get to on it. But so yeah, so that's the news today. Canadian dollar this afternoon. There's lots of yellow news today. We've just had some news on the pound and various other bits and pieces. We've had the average earnings and stuff. We've got some euro news in there as well, and building permits and things like that. But apart from that, nothing much else today to worry about. So. Tomorrow's obviously the big day. We've got all hell breaking loose tomorrow across everything. So it's going to be very busy. Morning, Hank. So yesterday, so as you know, yesterday, I'm over leveraged on, I was over leveraged on oil and the DAX because they were in really good spots. And I thought, yeah, we'll get in with a slightly bigger lot size than normal and see if we can take advantage of some fast moves. And we did, and I did, but it started to sort of peter out and give me a little bit less confidence. So I was a bit over leveraged on these two. So I just wanted to get these back down to normal contract sizes, normal lot sizes. These were 0.11s, they should have been 0.6s. These are 1.87s and should be about 0.9s. So yesterday I did drawdown control on oil. Started off with oil. They were both roughly about 3% or so. So I closed out. Let's bring this up so we can see, because there's lots of it. 15th, which is starting there. So I closed out some oil at a loss. That was an aggressive drawdown control position, I think, which was there. Yeah. So there was one position there which I took in as aggressive position, which stopped out straight away in the morning, which was a tiny little $70 loss. And then we pushed down really hard. So I got in with another oil down here. This was taken on 5 minute. So we had a nice big push up. We broke those highs, a couple of nice wicks to the downside. So it looked like we were starting to turn. So I got in with that one there, pulled back down, accumulated, and then broke out. So I took that one off up there. And then the oil drawdown control that I did was these 4 positions here. So with these positions, you can see these are going back a bit, all the way back up to over there. So I took, which one was it? That one off. So this position here was too close to this one. So I took this position off completely as a 0.11 there. So that was a $369 loss. And then I took 50% off of that position and 50% off of that position. Yeah, so I took a 0.5 off of those two for a further sort of $500 loss. That was a failed aggressive drawdown control, which I just got out of with 0.8, so ignore that one. It was a little trade down somewhere. So basically now I've got the correct lot sizing on these. So I've got two positions on at 0.6s there. I've got left one on at 0.11, which was the sort of double size lot, because that is still in profit. I'm hoping that's going to push today and we can see some profit gained off of this one, mainly because oil has pushed down. You can see these lows here. Yeah. Okay, so this one here, liquidity was run there. We pushed down there again. We pushed down there again. There was liquidity under all three of these positions. Yeah, so this was the lowest one here. And then they came down, didn't quite get there, pushed up again. So people will have entered there, stops under there. Pulled back down again, didn't quite get to that low, pushed up, people will have entered there. So there's stops under all three of these positions here. Okay, and they came down yesterday and the market swept the lot. So I'm hoping today this is the final move before we push back up to the upside. So I'm willing to leave this position on in the assumption that this was a liquidity run and we're now going to push back up towards these highs. Okay, so that's oil. The reason I did all that drawdown control on oil was because of the US dollar CAD. If you remember, I had an aggressive drawdown control position on the US dollar CAD. I'm going to have to go out to the 4 hour on this one. US dollar CAD I started scaling into here. And as you can see, I started scaling out of it. Basically, I reduced these down the week before. These were 0.18s. I reduced them down and reduced them down again. So I've been doing a little bit of drawdown control on this one. I got into an aggressive position down here, there, which was this 0.6. And that ran basically straight away from there all the way up. So as we pushed up yesterday, I took that aggressive position off. I scaled out of all of these winners. So all of that was profit, which I banked. And then I closed out those two from all the way up there completely and took a little bit of loss on those, which was like $140 or something. So all of that pulled me up to about 3% in profit for the day, which allowed me then to use 2/3 of that profit to do drawdown control on oil. Okay, and that's brought me back down to 0.82 on the day, but more importantly has got me into my comfort level again on oil. So happy with US dollar CAD, happy with pound US dollar, happy with Aussie New Zealand dollar, happy with oil now. It's just DAX that I need to concentrate on. This is still over leveraged, which is why I'm in 4.6%, because I've got too much leverage on the DAX. So good day yesterday across the board. I had some DAX trades here as well. As you can see, I took a DAX trade off yesterday, which was from Friday. So we pushed down, we started to pull back up, so I took that one off there, banked it, which is this one here. And then I had 2 attempts at aggressive drawdown control. Actually, I had 3 attempts at aggressive drawdown control yesterday. 1, 2, and 3. So you can see these are 3.5 lots because I've got 12.8 lots running. Actually, I didn't have 12.8 lots running because I've put an aggressive one on this morning. I had about 9 lots running. So this is roughly 50% of my open lot size on the DAX. And as you can see, if we just go to yesterday, had a sell there as we pushed back up. We made these new lows. I put this one in the Telegram group. We made a lower low there, and it looked like basically after this push we were just popping back down again. We had a symmetrical triangle which I was expecting to break to the downside, which it did. It got all the way down here and then started to pull back, so I exited that one with a profit on it. Then I attempted to get back in again as we pushed up into these highs, expecting it to drop and push down. It didn't, so I got out of that one. Yeah. and then we pushed up back into this area where I tried another one as we started to roll over, and again that one failed. So I had 3 aggressive drawdown controls. One worked, that paid for that one, so I basically lost $100 trying to get aggressive positions on yesterday, which didn't obviously work. I've just taken one this morning, which is going to stop out by the looks of things. So I'm stopping out on the highs, above the highs here. So what I'm looking for today, and the reason I took this one this morning really early when the market opened at 7 o'clock, was I'm looking for them to do a liquidity run of these 2 levels today and then drop it. So where we are now is exactly where I'm looking for them to go, but I don't want them to push much higher than that. So just take the liquidity there, and then hopefully drop down. And the reason for the drop down is because on the daily, we've got an inside bar. Shut that down now. That's all the trades basically that I took, so that's everything covered from yesterday. So we had this big strong bullish move back up again after this gap fill. Was expecting this to be a breakdown point. We didn't. We pushed up. Yesterday we put in an inside bar which was bullish, which doesn't mean anything. It just means that yesterday the bulls took back control. But I'm hoping today we're just going to take some of that liquidity and either put in an inside bar or start a move down. So hence having an aggressive position at these highs. My assumption is if we are going to move down, I want to be in at the highs, which is going to be where we are now. That will either work or it won't, one or the other. I don't know, but you've got to try and get in. So that's the position that I've taken this morning. We're just hunting that liquidity. Now it's 8:05, so the market's already open. If that works out, I'm going to add to that aggressive position on a break. So we've got a market structure break there. So I will add into that position, aggressive position, if this one starts to work, because if they do break down here, I get the feeling we're going to come down and challenge these lows, in which case my average will pop up to around there, which means I'll be able to get out of one of these positions down at these lows, and then do drawdown control on these positions to get these back down to normal 0.9s. That's the plan. There you go. That's today's plan. Done. See you later. Yeah. So basically, just trying to concentrate on the DAX and getting that back to normal. The rest of it will look after itself. But I'm just not worried about the DAX. Just a little bit uncomfortable with the over leveraging on it, which I shouldn't have done. But from a daily perspective, I still think we're coming down at some point. I just don't want to go into drawdown too deep on this, because my worry is this is where we're going to test the 200 moving average and this accumulation drop here. So this area of balance is potentially where we may push back up to. I can sustain a 2 ADR move against me, but I don't want to sustain a 2 ADR move against me with over leveraging, because that's going to take me up to probably about 15% on DAX in drawdown, which is way too much risk. So trying to do something about it, but we'll see. Just got to hold on and hope we get this high taken out today, and or double top it, either or. So we'll watch that. So that was me yesterday. Exposure on at the moment is pound US dollar, Aussie New Zealand, US dollar CAD, all fine and in control. Oil, not too worried about oil. I kind of regretting doing the aggressive drawdown control on oil yesterday. I should have done it on the DAX. I should have used that profit off the DAX rather than oil, because I've got much more confidence in oil pushing from the $90 level than I have of DAX coming back down faster. I think this is going to go quicker than DAX will come down, but I don't know. So, and obviously got the DAX on. No ADRs hit today, no weeklies so far. We did have a lot of ADR pushes yesterday. So remember I said yesterday, when we've got an FOMC or a non-farm payroll week, we tend to get one of two things. We either get a range bound Monday, Tuesday, and then a move on the Wednesday, or we get a pump Monday, Tuesday, and a reversal on the Wednesday. A lot of the pairs yesterday, we had big moves. We had ADRs, we had 150 ADRs, 175 ADRs. US dollar CAD is a prime example, which I rode all the way up yesterday. Yeah, this thing did not stop. Yeah, and this is this is why I didn't get out of this trade. There was zero reason for me to get out of this trade. Not one red candle since we started the move. We broke those highs and that was it. Didn't look back. These moves don't happen that often, and as I said in the Telegram group yesterday, you just got to ride them when you see them, and you take the luck when you get the luck. This is a lucky move, and you ride it and you keep it. It then, if you look at this wick, the reason I got out exactly where I got out was because of that wick. Yeah. So you look at the wicks. Yeah, every single one of these is a strong close, what's called a strong close candle. Yeah, the close of the candle was right towards the top on every candle. Yeah, and then we closed lower than 50%. So I was like, right, okay, we're weakening. Yeah, RSI was off the charts. Yeah, we're over 90 RSI on the 15 minute. And then the following candle, we had a massive wick put in, and then we had a bearish engulfing, which is obviously a sign that we've run out of buyers. Everybody's starting to take profit. But what we did actually was accumulate and push once more. But it was exhausted. This was 175 ADR, 150 ADR, something like that up there. So, but that's the reason I held that trade. Didn't give me a reason to get out, so I didn't. I had a trading stop on it all of about 150, 100, something like that. Then I moved it down to a 50 pip trailer when we started getting up to 95 extension on the RSI, and it just took me out on that trail. So, which I think you can see there, look. So this is a trading stop being activated on those four, and then these two were obviously drawdown control. So yeah, big moves yesterday. So today we're pushing again on the US dollar CAD. Really weak Canadian dollar at the moment. We've obviously got the CAD CPI news. I'm wondering if somebody's leaked something about CPI, which obviously we've got this afternoon. It's either that or the market is positioning itself ahead of positive CPI figures, with expectation of positive CPI figures to pump the CAD this afternoon. Don't know which. So I'm going to monitor this US dollar CAD and see what happens with it, because I might get flat on this. It's paid me 3%, 4% or 5% or something over since I got into it. So I'm more than happy to get flat on this and just ride out the news, because I don't really want to necessarily get this pumped into drawdown ahead of FOMC. Because if CAD pumps, and obviously US dollar to CAD comes down, and then we get an FOMC which is bearish, which is going to pump the US dollar down, this thing is going to fly into drawdown. So I'm going to monitor it. If I can get this back into 0.2% or something, I'll probably close that out today. Pound US dollar is moving nicely. DAX, what have you done, DAX? Okay, so DAX has taken out liquidity. It's done the liquidity run. Okay, stops taken. So looking for an opening range breakout, opening range low breakout. I'm going to take the low pre-market as a second entry, and then hopefully play it back down to the lows, which is well within an ADR, yesterday's low. See if we can attack that level, but we'll see. Right. Morning everybody that's come in and said morning. Guami, RK, Fabio, Sammy. So monthlies, nothing's changed. Weeklies, we've got nothing hit. Hourlies, we've got a couple this morning. We've got Euro Swiss. If there's anything anybody wants to look at, tell me, let me know. Or anybody's got any setups they're looking at. So we've got Euro Swiss and Euro US dollar on the hourlies. Obviously, as you know, I'm bearish Euro. So not really interested in longing it. it's been embedded since it's been embedded actually since Friday, and continuously just pushing down. The euro is just still massively weak. So if you're going to play a pullback on this, look at what you're getting with pullbacks. Don't get excited about a pullback. If you get an ADR, you're lucky, or half an ADR move to the upside, you're lucky on this at the moment. I'm just not interested in any kind of mean reversion opportunity on that. Euro US dollar, not interested. Again, it's a massive short, has been a massive short for months and months and months. So not really interested in mean reversion on that one. It is getting down to an interesting level down here. So these are the month's lows basically that we're attacking at the moment, or this is the end of July, and this month's low here. So we've got a level here. So we're extended on the hourly. We'll be extended on. We can see we're extended on the 4 hourly without even looking at it. This zone would be an area of interest for a pullback play. So some kind of pullback out of here is likely, because if you look at the veracity of this move, there's been no profit take at all on this move so far. The whole thing has just been a massive selling frenzy. So everybody that's got in short anywhere from up here, they're still in these positions, and they'll be looking to profit take. So there'll be a big fast profit take move coming at some point. Highly likely that's going to come off of either retail sales tomorrow or FOMC. So there's an opportunity down here for a mean reversion play, definitely. But I'd like to see it get all the way down there. If you look at it on the 4 hourly, obviously it's extended down there. This is the level that we're talking about down here. Yeah, it's a very strong support resistance area. So this zone, if we can get back down into here today, I'm not going to take it because I'm massively bearish on the euro. But if you want to get into a trade, this is a pretty good opportunity, but it's going to be a single quick play back into there somewhere, I would expect. So I'd much rather be shorting it up there, which I couldn't do because I was overloaded on the US. But I was in the US anyway, so it didn't matter. But yeah, so that was really good. That trade up there, but down here, less interested, but it will still work. You will still get a profit take move out of it. Look at it on 4 hour. You've had 2 accumulations on the 4 hour and the one we've just had yesterday. That's it. We've had no profit take. There's not been one pullback. Well, not even that. We've had nothing. Profit take move, nothing. So it's going to happen. It's extended. The elastic band is stretched very tight. We just need some catalysts to start that profit take move, and that will be in the form of limit orders, which the market will have placed in at these levels. Yeah, so there'll be limit orders sitting all around here, waiting to trigger when the market gets there. That will start some buying pressure. As people see the buying pressure start, everybody that is short here will think, okay, it looks like we're probably at the end of this move. They will then start taking profit, which means they become buyers. More buyers step in, which means everybody sees buying action. Then everyone goes, this is where we need to buy from, and it just happens. That's just how it works. So we're waiting for them to get to a point where they're going to trigger some kind of move, and this is the most likely spot. And obviously we've got 2 massive news events coming up tomorrow afternoon, which potentially couldn't act as a catalyst. Morning Pot Gaiter, good name. Sammy, you want to look at US dollar Swiss? Okay. So that's the hourlies. There's only those 2 at the moment. We're really not getting any extensions on these very much. And when they do happen, they're very fast, aren't they? We're getting extended and then boom, we're springing back really fast. So you've got to keep your wits about you on the 1 hour RSI dash at the moment. It's all happening very quick. Have a quick look at US dollar Swiss. I think that's going to come up on the... No, not extended on that. We were, weren't we? Yeah. So US dollar Swiss. These are the levels that we had drawn in. that we reacted from down here. We had this area of accumulation, these lows here. So it's sprung back nicely. I would look for 95 level to be an area we could pull back up into. Yeah, so this 4 hour gap. So where we had this accumulation drop, yeah, highly likely we're going to come back up and test this area. But this is really going to be dependent on what happens on tomorrow evening. It's all to do with FOMC. If they come out massively bearish in FOMC, we could well tank the US dollar. If they come out bullish, we'll see what the market makes of it. But the market's obviously not happy at the minute. So difficult to tell what to do with the US. As I say, I'm very undecided on directional bias on the US now. I really don't have one. I'm more neutral on it, and I think it will get pushed around a little bit, as it has been. So I'm quite happy to take the US dollar in either direction at the moment if I see a really good extended opportunity, except the euro. Euro is the one that I won't long. I just want to short the euro basically. So, hi Greg from Vancouver. Morning. So US dollar Swiss, tricky one. Are you long or short this? I can't remember. I think you're long this, aren't you? From here? From somewhere? From there? Maybe? I don't know. I can't remember. But yeah. I think there is every opportunity FOMC pumps as well. Don't forget, we don't know what's happening, but the last FOMC and the last sort of talking heads sessions we've had have been very U-turny on the US dollar, haven't they? So, but equally they can U-turn it back again. They're in control. They can do what they like. They guide the market. So you're long on it, are you? Yeah, Sammy. So yeah, it depends. If you can get to break even on this before FOMC, I would probably get out, which is what I'm planning to do with the US dollar CAD. I'm planning to get out of the US dollar CAD ahead of FOMC, just because there is a chance it's going to go completely the wrong way. Pound US dollar, I've got my exit on at the moment. I'm not going to take this off because even if the US dollar comes down, the pound is coming down anyway. The CAD, I'm expecting to power up. We've got CPI this afternoon. We've got CPI tomorrow for the pound as well. We've got CPI this afternoon for the CAD, which could potentially power it up. So I'm a little bit more wary about the CAD than I am with the pound US dollar, because the pound is a short. The CAD is more of a long because of oil, and I'm expecting oil to pump. The whole market's expecting oil to pump. I don't know what's going on with oil. It's just really struggling at the moment. But like I said, this run here should be the end of that. So reversal alert on M15 yesterday was where I got in with that aggressive position, and we've retested it. We haven't come back down. So I'm looking for a move. As you can see, I'm targeting this position here, out there, and then obviously I'll add on again and just keep adding to oil until it pulls its finger out and actually gets somewhere. So let's look at the 4 hours. Euro Swiss is again massive extended. So this is extended below 20. We did get down to 15. So we got down to 12 on this. That was lit up there late yesterday. We're extended as well below the 20 level on the daily, but it's to be expected with the Euro Swiss because it's a massive short and has been. I can't go back any further, but for a long time. So Euro Swiss, this has been a short since April last year. So 18 months we've been shorting this thing. So yeah, again, mean reversion on it. Highly probable that we're going to get some kind of profit take move, but all we're getting at the moment is accumulation drops. Yeah, we haven't had a profit take move on this. I mean, I guess that is a pullback. That is a profit take, isn't it? It's just very unorderly, but it's literally since we started that move, we haven't had one. So it's massively overdue, a pullback. We should get somewhere close to the 24, but I think on this what we will do is we will pull back into here. You can see obviously this is an obvious support resistance area here. This is where we've tapped into, we've tried, and then we finally broke it. The logical thing for the market to do would be to pull back to 97 and then continue to drop from there. Obviously we know the market's not logical, but people are going to want to take profit on this. But you know, it's one of those pairs where when you're getting short on it, you're quite happy to hold it short. You're massively in profit. So if it pulls back to the 24, you'd probably be thinking, yeah, it's only a little over pullback. This thing's just absolutely flying down. So it's a very dangerous mean reversion, that one. Not one that I'm interested in. But equally, it is likely to go. So if they come back down and sweep these lows, you can take a reverse alert on M15 on it, which has just happened. So if they came down again and took these lows out, you know, we're getting to the point where it should start to sort of bowl and roll over, but who knows. Euro yen. So obviously we looked at the yens yesterday, went through all the pairs in detail yesterday. The yen I'm still very unsure about. I think you'll probably get a pullback on this, but the worrying thing with this coming up to tomorrow evening is when FOMC comes out, the yen will move a lot. So if the yen powers up, which it could possibly do if we get bearish sentiment for the US dollar, this is coming back down to here. In which case then you'll be lovely and embedded. Bit similar to this, yeah. So we'll get down to a point where we should start to do a move, and then we'll put another leg in. Yeah, same sort of movement as you've had there. Accumulation drop. So if that was to happen on FOMC, that would be a beautiful trade. Where it is now, I'm just unsure. Your Fibbo traders will all be jumping in here. Yeah, they're all jumping on the 61.8. But it could do that very easily. So it's an opportunity. You know, like everything, we don't know. We can't time when the market is going to move. We don't know that. But we know that it moves, and it moves on profit takes. And when it's had a strong move in one direction, we tend to get a mean reversion. So the trade, if you want to take the euro yen long, is to enter here, and then obviously you plan one ADR, half an ADR to an ADR down to there, and then you would get out on the push back up, which would be the profit take move. So you can get into it. It's only just extended now. It was a little bit more extended. The entry was really this morning in Asia. So yeah, it's there right now, and it could well pop, but I wouldn't want to really go more than about half an ADR to 3/4 of an ADR to the upside on that one. We've also got Euro US dollar. We've already looked at this one. It's massively extended. We haven't had a move to the upside on it, but this is where I'm interested. In fact, I'm going to set an alert down there. Where shall I alert? I'll set it there just to let me know. So I'm just going to get an alert when we hit this level. We're entering parity area again. Remember the parity bounce that we had. Oh. Yeah, so this was our parity level. Where we got the bounce. If this breaks, That's where we're going again. We're going to test this again, double bottom it. So this is why I kind of like this level. It's extended on the RSI. We've had a big strong move. We've had no profit take. We've just had a couple of little accumulations in there. So the market's ready for a pullback. If it gets to there and it doesn't find any buyers there, which I just don't think is going to happen. There's going to be limit orders sitting at these lows. We've had a big balance area for weeks. There's going to be limits at the lows. We're likely to get the pushback from there. But if for any reason it doesn't, there is going to be limit orders galore sitting at the round number. So you're going to get it there. So if you enter here, you're looking at somewhere in there. You enter there, you're looking at roughly 120 pip drop, which is just over an ADR. So you can get 2 to 3 positions in on the way back down to parity, and then you'll get a big bounce. You'll get a similar sort of reaction, I would imagine, to that. I don't think they're going to let it go through there. I really don't. With the way the US dollar is at the moment, the US dollar isn't strong. It's not really going to have enough strength to slam through that. When it gets down to there, there's going to be more people interested in buying the euro than there is people interested in selling it. So I like it down there. So I like it here, but I like it down there more. But I would take a trade there. I think I traded this bounce. I'm pretty sure, I can't remember. Morning, I'm Amin. Sammy, I'm in profit on the US dollar Swiss. Are you in profit on that one, are you? Oh, right, okay, fine. Cool. Yeah. Yeah, try and, I think you're safe up to 95. In fact, I would get out at 95, get off the bus at 95. Especially after that. What's DAX doing? Not going anywhere at the minute. It's trying to be bullish, look, but there's a lot of sellers. We've got a lot of these limits all triggered up here. Since those limits triggered, we've got wicks to the upside. So the market's heavy this morning. Sellers are trampling at the minute. So I've got a good feeling about a break of these lows and drop today. Even if we don't reverse today, I think we're going to get at least a pullback into this area. So I like it. Euro US dollar covered. Pound Swiss. So pound Swiss obviously is another massive short against the Swissy, and the pound is dead. I was looking at the COT report this morning. Just shows you how out of sync the COT report is at the moment. COT report on the pound is long. So the vast majority of this is non-speculative. This is hedging. There's more longs gone into the futures market on the pound over the last couple of weeks than we've had for a long time. And the pound is still coming down a lot. So either this is, I would call it dumb futures money, dumb investment money, but either they are speculating us getting on top of inflation very quick, and they're looking at sort of quarterly returns on the pound because of the movement down, the amount of movement down, they're mean reverting it, or that is all hedge money. And obviously if it's hedge money, it's got nothing to do with speculative, which we can't tell. We can't tell what is hedge, what is speculative. So I don't trust this at the moment. That I kind of trust. That I trust. That I've trusted forever. And the yen, you can see the yen, we're starting to pull back out again now. The numbers are starting to drop quite dramatically on the yen. Again, I think this is more hedge based now than speculative, because we are expecting the yen to power up. It's had such a weak time, and you can see the market is starting to turn with the yen pairs, but it's still going to take Kuroda to step in and do something about it, which at the moment that isn't happening. So, but yeah, the COT report at the moment, we're looking at the pound Swiss, is very, very, very long, the pound. But the pound is utterly collapsing across the board, even against the yen. So it's dying on its arse, basically. So I wouldn't want to be longing the pound at all, especially against the Swiss franc, obviously, which had the big rate announcement drop on the 0.75 increase on the rates, or 0.7, whatever it was. And since then, obviously, that's been trampled. So but we are also, as with the euro, massively extended with no real profit take move at all. Attempted move there just got crushed. So we're extended. We got extended back here. We're embedded. Likely we are going to get a pullback on it, but it's really tricky pair to pick a pullback spot. You've got this propulsion gap there. You can see it better on the hourly. So you've got this nice big propulsion gap here, which has been tested multiple times. The seller stepped in, trampled them, then we moved back down further again. So there's two big targets to aim for. But I get the feeling with this, it's going to be kind of one of those rounded bottom gradual increases. Not going to get any movement like that, I don't think. But saying that, we have got CPI figures tomorrow. They're forecast to increase. But CPI for a lot of currencies at the moment isn't doing a lot. It's just factored in to be bigger. So the market is expecting it to be bigger. If this comes out worse than expected, I think that will probably have a decent reaction. Other than that, I don't think the CPI figure is going to do a massive amount. We'll be able to tell this afternoon off of the CAD CPIs. If that moves dramatically on a change, then yeah, we should probably pay attention to the pound tomorrow. But a lot of the CPIs coming out, apart from the US one, have been a little bit of a movement and a knee jerk, but no real follow through. So this is nicely extended on the 4 hour, but bias on this is definitely that at the moment. Although the Swissy is being pulled down by the euro again, even after the rate increase. So, but I'm not really interested in longing the pound. I'm more interested in shorting it. So we've got this level here, which would make sense to pull back to, but that I think is probably as far as we would get. By then the 24 will be coming down on top of you, ready to start the next leg. So again, these are all opportunities. Don't forget the RSI dash is there for mean reversion extensions. So every mean reversion has got as much chance of anything playing out as any other one has, except bias-wise, I would much rather be taking mean reversion shorts than longs with the pound. So take it if you like it, and as usual, plan your entries. So look at where we're going, if you can find somewhere, and if you're going to get in on this mean reversion, expect to be wrong, and expect to be wrong down to that level, which means you're going to be sitting potentially in 300 pips of drawdown, which is 4 to 5 ADR. So it just becomes less and less interesting the more you look at it and where it's going potentially. It's just, do you want to be sitting in 5 ADR? I don't know. Just not, it's too risky for me. Look at what we had last time on the extension here. So we got extended there, pushed down to almost 20 level here. We got that. That's it. So we got a pullback of 2 and a bit ADR, but based on a drop of 10 ADR, we got 2 ADR, 3 ADR pullback. So it's just not very appealing to me at the moment, this one. So yeah, not a lot we can do really with these. I don't think it's very. There's a lot of opportunities out there at the moment, especially ahead of FOMC. So I'm concentrating on the DAX and oil because they have got a as far as I'm concerned, a pretty strong directional bias, which should be kicking in very, very soon. The FX pairs are just struggling to find a way in. Trying to find a way in short on the euro is hard work. Euro pound looks good at the moment. But again, you know, we just about got an extension there and then went sat sideways for a week, which is, I think, what Diamond got into, isn't it? You know, it's 50 ADR. It's just not worth tying your money up in the moment. But that's really all I've got for you today. Just banked something. Pound US. So Pound US short. Look at that for a TPA. Didn't get any cleaner than that. So what do I want to do with that? Rest of that Pound US. It's in 0.4. It's in no drawdown at all. So I'm just going to leave that. DAX trade is not playing out at the minute. Not going anywhere. We are ranging at the moment on DAX. No directional bias by the looks of things. Everything else is just sitting there. So just waiting to work. Oil's doing okay this morning. Trying to. Made a new high, which is being rejected a little bit, but Aussie New Zealand. So again, Aussie New Zealand, I'm not planning on really looking to get out of this. I still like it long, Aussie New Zealand, buying every dip basically on this, as long as it stays above the 72 or roughly around about the 72. I'm expecting it to push highs all the time, so I'm just going to stay in that long. I've got a TP on that position there. This position is TPing up there. Sorry, that position is TPing there. That position is TPing there. This one will just, don't know, let it run, go for the highs really. Oh, no, wrong one. So that one was TPing up there somewhere. So yeah, like that, long still, just going to continue trading that one. As I say, main focus today is working the DAX. And US dollar CAD, I'm going to wait until 1 o'clock. I'm going to see where we are with the US dollar CAD. I might go flat on this. I'll see where we are. I'm not sure what I'm going to do with that one yet. They're like us, they believe in the prophecy. About 3 days of sideways, but an aggressive entry got me out on Wednesday. Yeah, that was the euro pound, euro pound. Yeah, and that's the beauty of position trading, isn't it? I mean, if you get bored with something that is going sideways, you can just get an aggressive position on at a good level. When you can see what's happening, just get an aggressive position on and get yourself out and flat, and just be done with it. Which is what I've been doing this week, just trying to get out of stuff that's just not going anywhere. If stuff starts ranging, you just assume it's going to continue ranging, and the next time it ranges, you take the big one and get out. Sammy, if you've got 2% profit on US dollar Swiss, you need to be banking it. Or at least try. I'll tell you what I'll do with this, yeah? US dollar Swiss, right now, I would have a trailer on it of 16 pips. 20 pips, 18, 15 to 20 pip trailer. Stick a trailer on all your positions, yeah? Broken out of new highs, you'll be trailing somewhere like that. If it pulls back, it's going to pull back into one of those 3 highs and go. If it's not going to pull back into one of those 3 highs, it's going to reverse and try and take these lows out. So your 2% is going to turn into 1% and you're going to be very annoyed. Bank it, 2%. My weekly target is 2.5%. You've got my weekly target in one trade there. Oh, you just said you've taken it off, right? Okay. Cool. Yeah. Don't forget, this is a marathon, not a sprint. We're bagging small profits every day with a goal of building up a nice weekly and a nice monthly buffer. Don't go for those home runs all the time. I took a home run yesterday on US dollar Swiss. But the only reason I took that home run on US dollar Swiss is because, as I said, it didn't give me a reason not to do it. There was if a bearish candle had come in here, I'd have been out there. But it just didn't give me any reason. There's absolutely no reason whatsoever for me to exit that trade all day, the whole session. And then when it did give me a reason, I got out. But that's the hard bit, holding. Diamond, the joke was on me though, because I got out and it collapsed. Yeah, well, that's always the way, isn't it? It's always the way. When you get out those, this is what I say. This is why we do this. This is why we drag our trades onto our charts. Yeah, so that we can see. Yeah, look at this. All of this drawdown control that I did there. Yeah, that drawdown control that I did there, that drawdown control that I did there, that drawdown control that I did there. If I hadn't have done that drawdown control, I'd be doing it here and I'd be taking pretty much a break even on that one, 50% of the loss on that and 50% of the loss on that. You don't know. This is the thing. You manage what you've got. You manage your portfolio, you manage your positions based on what your profit is there, and where your drawdown is, where needs attention at the moment. Where am I sitting waiting for stuff to happen? You can't expect the market to do exactly what you want it to do. Yeah, when I got into this trade here, I was targeting these highs. I was wrong. I've made 5% profit being wrong. Yeah, but you can't. I didn't know I was going to be wrong. If I knew I was going to be wrong, I wouldn't have got in, would I? And the same with you. If you go sideways and then you get yourself an out, you've got yourself an out. You've made money. Brilliant. Your goal is to make money. Your goal is not to get the home run. Your goal is not glory. Your goal is profit. Yeah, and everyone's focusing on the, I've said it many times, everybody's focusing on that 10-to-1 risk reward that I can post in the Telegram and go, look how amazing I am. The amount of people trading gold with 25 positions down there and then it pops and they're like, look how amazing I am at trading. Yeah, you had one lucky trade on the 25 accounts you've blown. Yes, it's a beautiful trade, but that's what you're interested in. Don't worry about the home runs. God, the amount of times I've got into trades and they've just flown. It's just what happens. Should I go out of that oil? There. Absolutely not. Look at it. It went all the way up there. More than double the profit that I took on it. But did I know that was going to happen? No one. You can't. You take the money when it's on the table. Take what the market gives you that you're happy with. And I think that's the problem. Everybody has to lower their expectations. Be happy with 0.5%, not 2%. If you're happy with 0.5%, you'll be amazed how many times you bank 0.5%. If you try and go for 2%, that's a lot harder to bank. 4 times more hard to bank, isn't it? Take the little bits. You're doing it exactly the right way. Get out when it's there. Oh, DAX is just doing my head in today. Another one of those sideways days. I get the feeling that might stop out. In fact, what I'm going to do is just reduce this down ever so slightly. If that isn't it, then it's going to do that. So I might as well just reduce my risk a little bit. We could stay inside the opening range, but it looks like the DAX wants to go higher today. Actually, let's have a quick look at the indices because I haven't looked at the others either. US indices, very similar today, looking a little bit stronger actually. But so yesterday, we had a much bigger push on the Nasdaq and the S&P and the Dow than we did on the DAX. The DAX pulled down and pushed up and managed to do an inside bar. All the other indices broke out higher. So the move down is taking a long time. I'm on the wrong chart, aren't I? the move down is taking a lot longer to kick in. So we've got all these levels, and we just seem to be just blowing through every level at the moment. There is more opportunity for upside, but you know, this is just a much larger pullback than we had previous. So that was our first pullback. This is a much larger pullback than we had before, basically. So I still think we have got another leg in us to the downside, definitely. But at the moment, we are very strong. I've got a feeling FOMC might change people's opinion on that this evening, but we'll see. The secret is short-term memory loss. I got out when I needed out of it. Yeah, exactly. Had around 1.5%, took off EG and US dollar Swiss, now up 2%. Cool, that's you, you're done for the day. Off you go. You're done for the week, actually. Oh yeah, my Forex funds account. Sorry, I forgot about that. I'm meant to be covering this every day, aren't I? Completely forgot. Yeah, so yesterday banked 0.6, up 1.17. Break even on everything else. So yesterday closed out US dollar Swiss 15th. Yeah. So closed out US dollar Swiss. That position and that position closed out at the highs. The reason for that closeout was ADR, I think, was 92 ADR. 80. No, it wasn't quite an ADR hit. Oh yeah, sorry, the reason I closed that out was because of this gap fill. Yeah. So the propulsion gap got filled, so I closed out those two at the propulsion gap just in case new leg started, which hasn't at the moment. So I've still got one running, and obviously if it pushes down, I will add back in. Aussie dollar Swiss closed out as well. Same reason, really. We got to this propulsion gap, which actually got filled. I had some profit on it, and basically we were pushing down and started to push back up again, so I exited that one as we got to that propulsion gap. I can't remember the exact reason I got out of this. I'm sure it was just because we'd hit this accumulation, and I was worried about a new leg starting on that one. That's 66 ADR. Right, yeah, so this was approaching ADR as well, and obviously we got the ADR extension yesterday, so it should have held it down to the gap fill, but didn't. Still got the one on short, and again, if we push back up, I will add short again. Other than that, everything. Aussie dollar Swiss got one on. Aussie New Zealand, I've got a couple of profit. Pound CAD, I've got some profit. Pound New Zealand is the only issue at the moment. DAX short, US dollar Swiss long, and oil long. So roughly break even on it. Pound New Zealand is the only thing that at the minute on that account is in DD, but you know, it's not far in DD. Two 1 hour candles and I'm out. I'm back in profit. But don't forget, this is very aggressive, this account. It's entering at quarter ADR intervals. So if we get accumulations, I'm going to get in tight, which means I'm going to get into drawdown faster, but equally I have the profit. The goal of this, my Forex Funds account, is to pass it fast. I've got to pass it within 30 days. So I've got to be aggressive with my positions. And obviously the danger with being aggressive on positions is it moves against you fast as well. So I'll be doing aggressive drawdown control as and when, but at the moment I don't need anything. It's just all ticking along okay. I can bank right now. I can bank another 0.5% now. But I need to be doing 2% a week because my target is 8% and I've got 30 days to get there. So I've got to be banking 2% a week. Otherwise I'm going to miss target, which means I do a free retake, but I don't want to. I just want to get past. So, but we'll see. It's all going okay at the moment. EA is just churning along. Yeah. I keep forgetting to do that update because I'm not really paying any attention to it. I check it kind of once, maybe twice a day. but I'm letting the EA just trade it. If I come in here and I see $200 basically sitting there, because the target is $300 per position. If I see $220, that's why I'd closed these out manually yesterday, the US dollar Swiss. Look, I closed it out because I had basically $200 there. I'm not going to let that go into drawdown. I'm just going to take that and then I'll add it back on if necessary. But I just want to get that over there, get that hit, that 8%, and then I'll worry about all this lot and dig myself out of whatever needs to be dug out of over there, if there is anything, by using aggressive drawdown control. Because don't forget, I've got 2.5k of drawdown allowance. So if I get to the point where I'm at sort of 7% there, anything that's in profit I will just shut out and concentrate on whatever's in drawdown and use that aggressive drawdown control to get out of that position and get the target hit. But yeah, it's all going okay at the minute. We're only 3 days in, aren't we? Well, 4 days. 1, 2, 3, 4, 5 days in now. 10th. So trade 16th. So yeah, trading days on 4. This is day 5 trading days. But yeah, going good. All good at the moment. Early days though. Pound Swiss is boiling my blood. Why is it boiling your blood? I thought you just got out of that. Sammy. Oh, that was US dollar Swiss. Oh, you're in pound Swiss as well. Oh, okay. Yeah, if you're long that, yeah. It's extended. Don't worry about it. You're going to get a pool. It's assuming you're long this, you're all right. You're going to get up to there. But I'm not sure if you're going to get higher than that. So, you have to wait and see. Down 5% on it. Bye my Forex funds account. You might be getting in too big and too fast there. If you're down 5%. Swissy party, yeah. I think you'll be alright. You know, don't forget we've got news. The likelihood is we're going to accumulate on the pound pairs now ahead of CPI tomorrow morning. The market's not going to want to move a massive amount on the pound today ahead of CPI figures. If this comes out at something ridiculous, it's going to be a massive movement on the pound. So the market will likely just accumulate today on the pound. So I'm not expecting a massive profit out of this pound. You know, I've taken that one off. I don't think I'm going to get much movement on this today, but we will see. But I'll bank what I can, and I'll obviously post in the Telegram group anything that I'm banking. Alright, so that's it for today. I'm not going to do a full rundown of all pairs today. I did that yesterday, so watch yesterday's stream if you're interested in that. But I will do another full rundown tomorrow ahead of FOMC. So if you've got Aussie on, be aware we've got the wage price index. Doesn't tend to do an awful lot that, but it depends how weak the New Zealand dollar is feeling as to whether or not that actually moves the Aussies. And then the big news tomorrow is the New Zealand dollar. So tomorrow, anything you've got on New Zealand or Aussie, you need to be putting TPs in place, ready to take profit if it goes your way. But that's coming out at 3%. It's forecast in at 3%. And you know, as I say, it's rare that we get movements which are, you know, as you can see, more than 0.25% difference. So you could be looking at 2.75 or 2.25. 2.75 or 3.25 worst case scenario. But they're moving up in 0.5% increments. So I think, you know, since April, 0.5% is going to be pretty stable. So I think you'll get some kind of spike out of it, but I don't think it'll be a prolonged spike because it's all factored in. But CPI tomorrow morning as well. So before we come on tomorrow morning, we've got 3 major news events, and then obviously US dollar, core retail, and FOMC tomorrow evening to look forward to. So it's going to be a biggie one. So what's your Watch anything you've got Oz and New Zealand. Be interesting. I'm probably going to bank this actually today, but the way it's going at the moment with the Aussie New Zealand, I'm probably going to be out of most of this. In fact, it's going to need me to get a good ADR move on it. So I'm just going to take some off and leave the rest running. I'm not worried about it. It's a small ADR, so I'll just, if it goes into drawdown, the rest of it I'll just manage it. Doesn't look like the DAX is helping me out today at all. Whoops. So we've just come up and retested those highs on the DAX. Limit orders have stepped in at the highs. So big propulsion move though, so potentially that's our move today for the Globex session for London. But if we break back down below these lows, I think we might get the flush. So tricky one today. Short play down into there. You could play a long play out of there. Who knows? Never know which way it's going, otherwise I'd be a millionaire and I wouldn't be talking to you, would I? Right, that's it for today. So anything you need, come in the Telegram group. I will be back tomorrow morning 7:50. We'll look at the aftermath of the Aussie New Zealand news, get ready and look at what's happened with the pound CPI, and obviously have a look at the market. We'll go through all the pairs tomorrow and have a look at opportunities ahead of FOMC. You off as well, Sammy? Yeah, cool. And as I say, come in the Telegram group if you need anything, any help with the indicators, EA, anything like that, or any analysis you want to do. I will be back tomorrow morning 7:50. Hopefully you have a profitable one, and I'll see you tomorrow.